In today's video, I'm going to share with you a list of 5 stocks that you can invest in order to build a portfolio that will earn you passive income monthly. 3 of these stocks pay quarterly dividends, while the other 2 pay monthly dividends. So you will get at least 2 to 3 companies paying you dividends every month, which is passive income. The first stock is Johnson & Johnson. As you can see, their share price has been on the rise for the last 20 years. Let's now compare the price of the shares of Johnson & Johnson in 2020 and right now. In 2020, it was $138.42 and currently it's $163.70, which show an increase by 18%. So Johnson & Johnson have been paying consecutive dividend increase for the last 60 years, which show that these are staple stock to invest in. And also, it's in the healthcare sector. I'm sure you heard of Johnson & Johnson during the COVID-19 because they also produce vaccine. Another company is 3M Company, and they have also been paying a consecutive dividend increase for the last 63 years. The sector in which this company is operating is in the industrial sector. Mostly they produce tools used in construction. And let's check out the share price for this company in the last 5 years. In 2020 July, their share price was 122.64 and currently it's 153.23, which show a 25% increase in the shares, meaning that the value of this company is increasing. And let's check out the months in which they pay dividends. So for Johnson & Johnson, they pay dividends on February, May, August, and November, while 3M Company pays on March, June, September, and December. So these are companies that pay dividends quarterly. We will also look at earning per share of these companies, and I'll show you the importance of knowing earning per share of this company so that you can know which stock to invest in. So our next company is Pepsi. This is another company that operates like Coca-Cola, and they pay dividends on March, June, September, and December. So this is a company that pays dividends quarterly. And let's check out the price of their stock in the last 5 years. So in 2022 July, the share price of Pepsi was $129.61 and currently it's at 143.24, which show a 10% increase. Now, for how long has Pepsi had a consecutive increase in the amount of dividend they pay? So that is 50 years, which is also showing that this is a company that is performing well, and it's in the food and beverage sector. It's the same as Coca-Cola. Coca-Cola is the competitor. So that is our third company. And let's check out or remind you on months which they pay dividends. So for Pepsi, they also pay on March, June, September, and December. Let's now go into the other 2 companies which pay their dividends monthly. So every month you will receive dividends, and that is EPR Properties, which is a real estate investment trust, and also we have AT&T, which also pay monthly. This is a company in the telecommunication sector. And let's see the share price of these 2 companies for the last 5 years. So EPR Properties share was going at $31.43 in July 2020, and currently it's at 58.73, which show an increase of 87%. And AT&T share price in 2020 was going at 15.68, and currently it's at 26.94, which show an 72% increase. So for how long have this company paid dividend increasingly? So AT&T have paid increasing dividend consecutively for the last 36 years, but this stopped in 2021. Currently, they are paying dividend on a flat rate. since 2021. But for EPR Properties, they have had 29 years in consecutive dividend increase. So in terms of the payments of dividends, they have been paying their shareholders. So one thing you should know about EPR Properties is that it's in the real estate sector, and the real estate sector is usually being affected by interest rates. So you should take caution when investing in real estate investment trust. Let's now check out the earning per shares of these companies, because it's important to check out so that you can determine whether this company is likely to maintain the increasing dividend payments. So we'll start with the three companies that pay dividends quarterly. So for Johnson & Johnson, their yearly earning per share ranges between 9.07 to 9.35 US dollars, and quarterly earning per share is around 2.9 US dollars, which is good compared to the other companies. And for Pepsi, their yearly earning per share is between 6.8 US dollars to 6.82, and their quarterly adjusted earning per share is 2.12. And for 3M company, their earning per share is between 7.95 to 8.03. That is their yearly earning per share. And the quarterly for this is 1.88 US dollars. Let's now check out the earning per share of the other two companies. As you can see, the earning per share for these two other companies is quite low because they pay their dividends monthly. So the earning per share for EPR Properties usually ranges between 1.63 to 1.66. That is their yearly earning per share. And for AT&T, it's 0.99 to 1.33 yearly earning per share, and for quarterly it's 0.49. Let's check out now why you should check out the earning per share and the importance of earning per shares when it comes to choosing which company to invest in. When analyzing stocks, it's essential to understand earning per share, or EPS, which is net income minus preferred dividends divided by the average outstanding shares or ordinary shares. A higher earning per share means the company is generating more profits per share, and this gives a strong ability to pay and grow dividends over time. So always check out the earning per share of the companies you want to invest in. But earning per share isn't just a number, it's a profit engine behind those monthly or quarterly dividends checks. So for a company to pay dividends, they must have a positive earning per share. And also, you should look out to payout ratio, which is dividends per share divided by earning per share. Ideally, companies maintain a payout ratio below approximately 80%. So a company needs to retain some amount of their profit, and then a certain percentage they give out as dividends. And the ratio between the dividend per share and earning per share is called payout ratio. Ideally, companies maintain a payout ratio below approximately 80%, allowing them to retain sufficient earning for reinvestment in the business and sustain or increase dividends. So most companies will always retain some amount of their earnings in order to sustain themselves and also to increase dividends. So in our portfolio, Johnson & Johnson, Pepsi, and 3M company have strong earning per share, which is over 6 to 9 US dollars, giving them the margin to support continued dividends increase. Now let's check out the other ones. EPR and AT&T have lower earning per share, that is 1 to 1.6. So you should monitor their payout ratio to ensure they don't overextend. because if they overextend, that means that they will not retain some good amount of money to continue with their business and increase dividends. So you should always go for growing earning per share and consecutive payout ratio for more safe and more sustainable dividends. Hope you have learned something from this and you will use this information for educational purpose. This is not a financial advice because investing in the stock market is a risky business, and also dividend always fluctuates and you might lose your money. So make sure that you do more research when it comes to investing in a particular stock. So these are the list of the 5 stocks that you can check out and add it in your portfolio if you want to earn passive income monthly.